Yo, right here, right now, it's time. Let's do it. Yo.
Hi everybody, it's John Seville from Acorn Wealth here, and it's that time of the week again for Acorn's Trade of the Week review, and very exciting session tonight as we actually go into probably one of the most exciting times for me as an options and stock trader, which is earnings season. This is the time of the year that I look forward to the most. There's potentially extremely good money to be made, and what we're going to do is review some of the trades that we've been following and trading through this period, and just to cover how we found them and some of the strategies we've been using. Of course, the normal disclaimer up on the screen here, you can have a quick read through. Now, let's talk about earnings season and options. Earnings season, of course, is typically a very dangerous period for stock investors because you can have these dramatic moves to the upside or the downside, which can affect an unknown amount of your capital. Now, as a trader, I don't usually hold stocks into into earnings because there is an unlimited risk on your position. However, with options, what I like to do is actually find very cheaply priced options that are puts or calls on a position that's about to report earnings within the next day or two. And what I know is I can then buy that option, and if the stock goes the way I want, I can make a significant amount of money on a low-priced option that's close to expiration. And if it goes the wrong way, all I risk to lose is what I put in that position. So for example, if I expect stock XYZ to drop 10%, I could put, say, $1,000 in that position, and if it drops 10%, I might make up to anywhere from 500 to 1,000% with a correctly chosen option on that move if it does what I want. So on 1,000, I might make 10,000 in profit. If it goes the wrong way, all I risk is what's in that position. So, you know, if I was trading with a smaller account, I might put, say, 200 in that position, and my upside could be 2,000 if I get it right, and I only risk to lose a maximum of 200 if I get it wrong. So options can be very exciting, full of surprises, but obviously very dangerous if you just close your eyes and gamble, but extremely profitable if you know what to, or potentially profitable if you know what to look for and how to find well-calculated risks. And we have a very precise checklist that we scan for and trade. And for those of you who don't know Acorn, that's exactly what we do as a company. We actually teach these strategies to students all around the world. Now, last time we reviewed these trades in our trading room, we hold this kind of weekly news show where we talk about the stocks that are actually coming up in our stock screener, which scans the market using our proprietary technology for stocks that are poised to move in one direction or the other. And the four that came up last week was Cypress Semiconductor, American Express, Microsoft, and AutoNation. And there was a very specific set of criterias using technical analysis that we searched for that found these positions. And the program we use, using our technology, actually narrowed down over 1,000 positions down to about 10. And from that 10, we selected these four as the ones that met our strategy the best. Now, based on that criteria, I'm going to show you what actually happened before and after, since these actually filtered through our scans as possible selections to trade. Let's start with the worst of the bunch, Cypress Semiconductor. Now, essentially what's common in all of these different positions is we searched for a particular technical analysis setup that is something we use all the time, which is searching for stocks at an extreme level, which means basically, if you imagine an elastic band, it's been stretched so far in one direction, it's likely to snap back in the other direction. And when we looked at this stock, we found that it was indeed at an extreme. And what we then look for is, hey, is it reporting earnings? Is there heavy insider selling and institutional selling? And so as that came up, we were looking to short that at around 1160. I actually bought put contracts on this day here where I'm pointing to. And this is an example of a trade that went bad and how you would have exited that. So what happened is we were shorting this because it was beneath resistance with a lot of good underlying reasons as to why it should drop. But it didn't drop. It actually instead, the day before earnings, broke through that ceiling. And this was the key signal to abandon the position. So what I actually did with my own position was I sold most of it. I still kept a few contracts on it for a speculation, but because it broke the rule of why I was getting in, I abandoned most of my position and was able to minimize my losses when it actually gapped the wrong way or up versus what we were hoping for or expecting. So there's an example of the worst trade, but how you could avoid that loss when you see the trade go the opposite way. And that's the key thing about risk management. What about American Express? Let's talk about this one. This also met the strategy. Again, heavy insider selling, heavy institutional selling, and once again, this stock had a double top. And this is where we found it, right here, where you can see this line pointing. As we spotted it there, we thought, yep, that's definitely looking like something that meets our strategy. And several days later, it got downgraded by Overseas Body, and then also missed expectations and went even further down. So over a 5% drop, but much, much more on the options, anywhere from 50% to a lot more, depending on what type of options you might have been trading. So again, really using the factors in your favor. So when there's a surprise, you actually have the probability in your favor where that surprise could go towards a really big chunk of profits if you indeed are an options trader, and work that to your favor. Now, this was the biggest and best one, and this was Microsoft. This was in a technical analysis pattern of this broadening range. You can see that there was a quite significant trend line resistance that it ran straight into and hit that, and that was right where we were talking about it when it came up in our scan. And we thought, look, this could really be set to drop because of the way that everything's going. I mean, very heavy insider selling, heavy institutional selling. The technical analysis strategies that we use confirmed it all. And as it just before earnings, it rolled over and then bam, plummeted. And this, if you were trading July 34 puts, if you had, for example, if you were an options trader, there was, the cheapest you can get an option is the day before it expires. And given that reported the day before expiration, you could have actually bought July 34 puts for around about 29 cents or so. And those options shot up to just under $3 overnight, so almost 1,000% gain if you'd played that way with some risk capital. Now again, that strategy that's a very aggressive strategy, obviously not for everybody, and decide what's right for you based on your own risk profile. But I just want to highlight what the potential is of some of these trades. Even a tenth of that, even 100% move, still a lot better than you'll get at the banks, of course. So there's Microsoft. And AutoNation, this was actually my favorite one, and this was the one that I played the heaviest position in. I actually, unfortunately, didn't get the full move of Microsoft. I sold early because I made a mistake on the earnings. But the AutoNation was one of my favorites, and this one actually started rolling over well before it even reported. And the heavy insider selling, heavy institutional selling, the technicals confirmed. So when we reviewed this, this is something that I went in and bought $47.50 July puts the day before earnings, bought them for 60 cents, and we bought them at about 7:30 in the morning Pacific time and sold them the very next morning at 6:38 for 75 cents, so making a 25% gain over just less than 24 hours. And you can see that again, it's a pennant formation, very substantial resistance on either side. It was rallying right into that resistance. All the fundamental things we checked out lined up. It met our technical analysis criteria, so that was something that was a no-brainer for me. And there's a photo from my brokerage account, actually, where you can see there that we got in at 60 cents, or the $45 put, sorry, on July 17th at 7.41, and then sold them the next morning at 6.75 cents. And that just goes to show, when you have an exact strategy, it's really simple. So what is your strategy? Do you have an exact profile that you're searching for, that you've found consistent winning success? And if you were to write down those rules that you would stick to, what would they look like? Do you have a list that you can feel confident in that you've been trading over and over again? If you don't, then I would challenge that you maybe should, because running a stock portfolio should be just like running a business. You should always have a strategy, and your strategy should be making your money work while you enjoy your life. This is actually a photo of me hiking in the Canadian Rockies. And at the same time I was hiking, this was only a few weeks ago, I had positions in the market with my stop losses, entry, exits, and all my orders, managing my positions for me so I could come back and see whether I'd made money or not that day. And if you're still spending hours in front of the computer stressing over your positions and how to trade, you are still working. Your money is not working for you. And that's what I would challenge you to change. What we're offering is a trial of our services and actually access to an upcoming webinar where we're going to share with people the strategy of how we found these positions and exactly how we traded them. It's a proprietary method that we developed that has worked consistently through these types of earnings seasons and very valid for any kind of earnings season coming up. So register for the trial using the link below, and that will gain you complimentary access to that upcoming webinar showing you exactly how we found those opportunities. And we'll actually also give you complimentary access to our 7-day gold service, and that will give you access to our 7 days of newsletters where we'll tell you what we're going to trade ourselves the next day before we do it. We also have 2 live trading room sessions on Tuesdays and Thursdays where over the course of an hour we'll analyze the market and talk about what the technicals are doing and teach you different strategies that we're using that week. And of course, we're confident that after going through a week of this, you'll learn a lot from it, and hopefully will impress you enough to want to try some of our other services out. This is John Seville out for the evening, and definitely click the link below. We look forward to seeing you soon. Cheers.